Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is Michael Pento. Michael is an active money manager at Pento Portfolio Strategies. Thank you for joining us, Michael.
Thanks for having me on, Ivan.
Huge pleasure having you on. It's been a while since you've been on, and a lot of times I've been watching your interviews on other channels, and there a lot of the repeating terms is you've predicted for decades that the U.S. is a banana republic. But when does it all come to an end? How does this bubble pop?
Well, unfortunately, yeah, I predicted that we would end up in the state of a banana republic, and that's pretty much where we are right now. If you look at things like when I was a kid, just getting into this business in the early 90s, you never thought that the Federal Reserve would monetize trillions of dollars in debt within a few years. That's what banana republics do. And banana republic, but that's exactly what we've done. We took the balance sheet from 700 billion in 2007 to over $9 trillion just post COVID. I mean, now it's down to 6.6, but we're ready to start the printing presses and fire them up full speed ahead starting today. Gonna cut interest rates again, which is another unwarranted and dangerous cut. Which leads me to answer your question. We just can't stop falsifying asset prices, and we can't live in a world where in an honest regime where real interest rates are positive. So we're destroying the middle class. We've blown up asset prices into the thermosphere. And even though unemployment is 4.3% and asset prices are at record, real estate is unaffordable, the most unaffordable in history. Total market cap of equities to GDP is 218% off the charts.
Wow.
The normal metric is 90%. Credit spreads tight, financial conditions easy. And what do we see happening? The Fed is ready to cut interest rates because, oh my gosh, we had a couple of bad, labor market data points. Well,
Right.
so what? It's called the business cycle. You have to let the business cycle occur. So what's eventually going to pop this bubble is I think the bond market, in particular, the long end of the bond market, will begin to rise intractably, rates rising intractably, which I believe will be the direct result of both inflation and insolvency on the part of the United States. So we have the inflation part, we're almost into the insolvency part. Um, you know, you have to ask yourself, will you, as an investor in U.S. Treasuries, accept 4% on a benchmark 10-year note if inflation is running at 9% like it was the way they counted it not too long ago, just post-COVID, really was more like 17 to 20%. How much, how many treasuries do you want to lock up for 10 years when inflation's running in double digits? And the answer would be zero. So you wouldn't be doing that. You would be shorting them as I am now.
Hello, my silver and gold bugs. I just wanted to say thank you so much for watching the video. Hit the subscribe button, hit the like button, and also hit the notification bell so you don't miss any future uploads. Back to the video. Looking at the United States, do you think they're losing their free economy status where, there's so much intervention to the point now where it's a controlled economy, and you have tariffs. You have now, the Fed lowering interest rates when they shouldn't be. Have they lost their spirit of free economy and free market?
Well, Ivan, how can you have a free economy when the most important price signal in a free market economy is the cost of money?
Right.
Cost of money is, in other words, interest rates should be a function of the supply of serving savings versus the demand for money. And we've completely falsified that. And that's why you see real estate in a massive bubble and you see equities in a massive bubble. And, you think about losing your freedom. What happens when a banana republic has, the most emblematic thing that they can display is that the state wants to take control of a central bank,
Right.
right? So there is no separation between the prime minister and the head of the central bank. That's emblematic of banana republics. But what do we see happening now? And you know what else you can't trust in banana republics is the data, because the data is manipulated by the state.
Yeah.
And now and I actually voted for Trump. I'm a libertarian. I'm for freedom. But what I mean, if you have a bad a few bad data points that you don't like, listen. These people are feckless and incompetent. I'm talking about the people at the Bureau of Labor Statistics. I agree, but what they were doing, Ivan, was overstating the job numbers.
Right.
They understate inflation. So if you want to fire people for being incompetent, if you want to fire the Federal Reserve for being incompetent, I'm all for it.
Absolutely.
But their incompetence isn't that, well, they constantly err on the side of keeping interest rates too high. No, quite the opposite. They constantly err on the side of these preemptive rate cuts because, God forbid, we have a hiccup in the stock market or a speed bump in the economy. Yeah, they don't understand the business cycle. You blow up asset bubbles, you blow up the amount of debt, and the gales of creative destruction. Joseph Schumpeter came up with that, not me. Okay, what you're doing is it's a cathartic cleansing of the imbalances in the economy. Too much financialization, asset prices too high, too much debt in private credit or whatever, and they go bankrupt, and that capital is recycled into more productive places.
Right.
Why can't we allow that? You ask about freedom. We don't have it anymore. We have a politicized and financialized economy.
Absolutely. Do you think we're, looking at silver and gold, since the last time we've talked, it's in a completely new space. Like you're looking at silver around $42, you're looking at gold prices. Is it just economic uncertainty? Is it geopolitical tensions? Is it a mix of everything? Where are we going for precious metals?
Well, you have to throw platinum in that mix too.
Absolutely.
You can't get any more precious than platinum and gold. Semi-precious is silver. Yeah, they're in a massive bull market. Part of that has to do with the fact that foreigners cannot trust their savings in U.S. dollars and debt anymore, so they're selling their trade surpluses instead of just holding dollars and treasuries. They're selling their treasuries and dollars and going into gold, which they can hold themselves. So it's more immune from confiscations and tariffs and whatnot. But then again, you have the idea that the Fed's balance sheet went from 700 billion to over $9 trillion. It came down a little bit, but the fact of the matter is that the Federal Reserve cannot provide investors with a real return on their money.
Right.
So when you have negative real interest rates, you have to go into something that maintains its purchasing power. So nominal rates are low, real interest rates are negative. It's a massive tailwind to precious metals. And that's what's occurring here. And I think it's going to get a lot worse. I think we're heading for a condition of I have an intractable stagflation in this country.
Wow.
And that's unfortunately my prediction.
And
I
that's
hope I hope I'm wrong.
I've always heard in the past from a lot of people I've interviewed that, inflation, you're going to have inflation, but what you don't want is
Mhm.
stagflation.
Well,
So
inflation causes the stag part. I
right,
mean, if you hollow out America's middle class, its productive capacity, then what are you left with? You're left with an over financialized system that has to implode upon itself. And that's exactly what we're seeing today. I mean, if you can't afford, if most Americans can't afford a house and home, you can see the home. We had data today came out this morning on new homes being built and permits. They're miserable because the real estate transaction market is frozen. And how can you have a healthy economy when that's the case?
yeah,
When you have a bifurcation, I didn't make this up, a K-shaped economy, where you have what you really have more specifically, in my terms, is you have the bottom four quintiles that are hanging on by a thread, and the top 20%, which is doing fantastic. They're spending like monkeys because of all the asset bubble inflation.
right.
You just can't have a vibrant economy when that's the case. And that's what we have now. Inflation begets stagflation. If it lasts long and if it's protracted and it reaches a certain, destabilizing level, which is what we have.
Absolutely. Michael, what would you tell people right now who want to protect their portfolios, protect their purchasing power right now, and even the youth? What would be your guidance to them?
The youth? Did you say the youth?
Yeah, the youth, like they're getting into the silver and the gold and the platinum and
Uh,
wanting to protect themselves. Is it too late? How can they help themselves?
well, yeah, so you asked two different questions. I mean, right now I manage money for not just youths, mostly for multimillionaires. And we're buying energy for the first time in a long time. We've
Okay.
owned gold for a very long time. We went into the platinum space about 4 months ago. We have energy producing land, not only just oil and natural gas. We went into uranium in a play that we have, which is part of utilities. Um, we also have foreign stocks too. We have Mexico, we have Australia, we have India.
Mm-hmm.
What we don't own a lot of, we're not overly exposed in, is this Mag 7, which I think is going to be the most dangerous thing to invest in. Because while it's working now, it's just impossible to ignore what happened in the year 2000 when, even though, like, just take for example Cisco. Yeah, was the internet real? Was it a game changer? Absolutely.
Right.
But was there an inordinate amount of investment in switches and routers and fiber optic cable in 1999 and 2000? Absolutely. And when you have a recession, the capital that's used by businesses, in other words, the customers for Cisco, went away, even though it was a viable technology, a very important, life-changing productivity boost. So it's the same thing that's going to happen again. So the customers of NVIDIA will go away because they just don't have the money. They don't have the cash flow
Yeah.
in a recession. So that's what I'm most worried about. And those are the prices that are going to drop, you know, 70% or more.
Wow. And now a message from our sponsor, Juggernaut Exploration.
One of the more exciting ones, I think, is Juggernaut. I know some people say, well, lightning can't strike twice, and but look, I think one of the things you got to reflect on is that the some of the guys who work here at Juggernaut are some of the same geologists that basically found and have now advanced sherbet at Goliath, okay, over the past years. So they have a very different way of thinking about exploration in the Golden Triangle than most other geologists. Okay, and they've gone out and they've identified what could be another sherbet type target here, and the size of these veins is absolutely jaw dropping. My hunch is these guys are onto something pretty special.
The link in the description is right below for Juggernaut Exploration. Now back to the episode. Wow, that's it's crazy. Michael, I want to thank you so much for joining us and speaking to the community. It's such a huge pleasure having you on. I know you haven't been back in a while, but I really want to make it a more regular occurrence where you're coming down and updating everyone in the precious metals community here. But it's such a huge pleasure having you on. And where can people find you? I'm going to put your links in the description below, but where can they find you?
So the website is pentoport.com. Pento, my last name, and ports, P-O-R-T.com. And if you have $100,000 to invest and you're a U.S. citizen and you're qualified for the portfolio, I'll manage your money directly using the inflation, deflation, and economic cycle strategy. Or if you don't qualify, or you just want to listen to the podcast, it's $50 a year. It's called the midweek reality check.
Awesome. Everyone watching this, highly recommend you go follow Michael's work. And Michael, again, such a huge pleasure having you on.
Thank you, Ivan.
Talk to you soon.